Hi, this is Jed with ForexStrategySecrets.com. Wanted to share with you two trades that I took last week. One I took in front of you while I was recording another topic, and I did a follow-up to that recording as well. And you can see those in our YouTube channel. The interesting thing about this particular trade, and I'll show you two of them. One was in the Aussie US and the other one was in the New Zealand yen. Here in the Aussie US, this is the week chart. You can see that what I was looking for was a leg 2, and for those of you who don't know what the leg 2 is, that's in our nth degree plus system. But this was the prime place I was looking for. I jumped in off the sound signals, was trading multiple time frames and having a great time. Even though I gained 206 pips on this position, I closed it too early. And let me show you why I did that and what caused me to make that fatal error in being able to capture double what I got. I could have gotten at least 460 pips out of this trend before it rested on this bar right here. Now, with a little side note here, I could still get in and take some more out of this trend, but for the most part I'm just going to watch to see how this pans out, see if I get any fresh signals. But for the most part I'm probably out of this particular position. It has answered the CDC, so we'll see what happens. But what I had done, let's go down to the day chart. Okay, you can see for the most part it hadn't even hit a resistance level until now. And there was no exit signal right there on that chart. What got me out was here on the 1 hour chart. Right here on the 1 hour chart, I started to see some slowing happening. And instead of just letting it ride, knowing that the larger time frame was giving me no indication that it was ready to start turning, I closed it without really looking at the larger time frame or putting my trust in the time frame that I had entered on. So this being the case, I made a fatal error here in losing this potential right here. The fatal error is that for 206 pips I gave away almost double that. So for my exit here, I could have, if I would have closed here at this exit that I see here, yeah, 250 pips. So is that a bad trade? No. Could it have been better? Yes. Was it a long-term position? Yes. Did I have fun with it? Yes. So let's go to the New Zealand yen. Okay, here again you can see the trade I took right here. And went here. This was a much better position because I had two positions on here, one right after the other. Really trying to work this trend and play the game. Had a lot of fun with this one. But this particular trade in question is this one right here, where I took 176 pips out of it. Okay. Now again, this one was entered right around the same time I took the Aussie dollar, and I exited it based on what I saw on the Aussie dollar. Okay, the week chart shows no ending in sight. The day chart showed no ending in sight. The 4 hour chart showed no ending in sight. And the 1 hour chart, you can see, was showing some slowing, but there was still strong momentum here. So I had no reason to get out of that because everything was telling me to stay in. So again, here's my advice to you in taking trades like this and you see things starting to slow. If you're concerned about it, pull your stop loss up. I probably would have put it right in here between this point and this point right here somewhere. If I would have done that, I would have still been in the game. Now, keep that in mind when you're trading, that stop losses can be just as valuable as closing the trade because it can buy you more pips. This is Jed with Forex Strategy Secrets, signing off.